All right, journal entry number what? 25. This is August 8th, 2025. Um, New York session open, and this is an opening range bounce trade. I was looking for longs on this 15 clean on this clean 15-minute divergence with the E-mini S&P 500. I was looking at the Nasdaq. So my preferred market to trade was actually the lagging market. In this case, the S&P 500, right? But with the S&P 500, we never got that opening range bounce. So there was no setup for me. Now, I don't trade this particular setup, which is a close, more so because this is a 15-second chart, a close above the opening range bounce. That is a big no-no for me. So really was looking for that pullback towards the opening range bounce. The structural lows were this. I wouldn't have minded that price would have liquidated those lows. Actually, that would be an even better setup if price would have liquidated those lows and then move higher. But in any case, let's continue. So the S&P 500 did not bounce back towards the opening range, and the Nasdaq did. So that created a nice 15-second divergence right here with the S&P 500. Now, this was a very short-lived trade in the sense that the range on which I was trading was quite tight, right? Final targets were here at the yesterday's New York session highs. That eventually got hit, right? They eventually got hit. We're going to see that. But I manually closed here, and I think that was a good decision. So let's see. Now, the setup was perfect. The Nasdaq came back towards the opening range, tapped it, created a lower low, whilst the S&P 500 still was looking at a higher low. So that's a very nice divergence, and I tagged this orange because it's not a bad decision to enter here on a candle flip. This is a um, a W formation, whatever you want to call it, a candle flip. It's not a bad decision to do this. But it's always better for me to wait for that structure shift. Even though, actually, you know what? Now that I'm looking at it, this is not a real structure shift because this high did not liquidate this low. So this is an internal structure. So my bad. Um, so my bad. This is not a real structure shift. The real structure shift would have been here. So that would have been a no-no. So no, you know what? I'm gonna tag it like this because I didn't, you know what? This is my journal. I can do whatever the fuck I want. So hold on. So no real structure shift. Okay. Or structure shift because the that internal load did not liquidate. Internal low didn't liquidate. The internal high, the previous low. So yeah, this is because the internal high did not liquidate the internal. So orange, right? Now this is my entry right here. Entry and this actually I'm gonna put this here and I'm going to put this here. So entry at candle flip and right here actually. And this control base. This is the high I'm talking about right here. So a couple of things here. Now it's better. Now it's better. All right. So I was looking at this candle flip, and because my stop losses were below the structured low, I wouldn't have minded a liquidation of this low before a continuation higher, right? I would have not added here. But you know what? The entry was okay. Now, trade management, that was perfect. Took three out at the previous structure highs. And then I manually closed the entire trade here. So I waited for this entire chop. And when price created this candle right here and immediately went down, so that told me we had a not a shift in structure, shift in flow or order flow, but very, very likely we were going to move down. And because I was trading at a tight range, meaning that my entry was here, and my stop losses were already at break even, it was a 50-50 chance that I would get stopped out. Yes, price could go and went higher to tap my final targets, but the decision to close here was because of my tight range. And my stop loss is at break even. So I think that was a good decision eventually. The market continued to rally and hit my targets without hitting my stop losses at break even, which is fine. I'm happy with the trade. Actually, I'm going to add this here. Fully out at failure to break higher because what? Because massive divergence with ES and tight range with stop loss at our break even. So here it is. I'm going to also journal this divergence here. Journal blue. All right, cool. So this is the divergence that I'm talking about. Massive, massive divergence right here. Wolf, 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 wolf. Boom. Divergence. Okay, cool. Bam. I'm gonna add this here. Boom, boom, boom. This divergence was the trigger to fully manually close the rest of my position, which I think it's a great, great decision. I cannot look in hindsight. So this is my trade for today. I'm done for the week. Break even-ish week. A few errors, few mistakes. We're gonna go through that on the end of week journey.